In this tutorial, we'll be looking at bond types. The first type of bond is called a fixed rate bond. This is the most common type of bond found in the market, and it gets its name from the fact that its coupon payment is fixed every single time. So if the coupon payment is 10%, it will be 10% for the duration of the bond. The second type of bond is known as a floating rate bond. And again, as the name suggests, the coupon for this bond is variable. It's based on some sort of index, say the inflation rate. So whatever the inflation rate is, this bond will give you a coupon of 2% over and above that inflation rate. The third type of bond is called a government bond. This is obviously a bond that's issued by the government. And since it's issued by the government, it should, technically speaking, be considered a low risk bond, and therefore the interest associated with it will also be low. We do know, however, that this is not always the case. Some governments are more risky to deal with, and therefore you'd expect a compensation by way of a higher interest. The third type of bond is what's known as a convertible bond, and as the name suggests, this is a bond that you can turn into shares at some sort of set price and time in the future. The fifth type of bond is called a perpetual bond. This basically means that this bond has no fixed end date, it's got no maturity, and therefore the coupon payments will be paid out forever. Number 6 is a zero coupon bond. Again, the explanation behind this bond is in its name. It doesn't pay out any sort of coupon payments. The way in which the bondholder makes a return on this bond is that this bond trades at a discount to its par value. So the difference between the price that you pay for the bond and the par value represents the return to the bondholder. The seventh type of bond that we're looking at is called a Eurobond. This is also known as an external bond. The reason for that is that the currency that the bond is denoted in is different from the currency of the market in which it is issued. So you could have a bond issued in the UK where the currency is pounds, but this bond pays you in dollars. That is a Euro bond. The eighth type of bond is called a premium bond. The reason it's called a premium bond is because it's trading at what is known as a premium to its par value. In other words, the price of this bond is higher than the par value of this bond. And the reason why that's the case is because this bond is offering a coupon rate which is higher than the market interest rates. In other words, the rate that it is offering in terms of its coupon is higher than interest rates of similar financial instruments in the market. And then lastly, you get what is known as a discount bond. This is the opposite of a premium bond. The reason it's called a discount bond is because its price, what you can buy it for, is lower than the par value. The reason for that is that the rate that this bond is offering is lower than the market interest rate. At this point, it's important to note that a bond can have a number of different features. So you could have a fixed rate bond that trades at a premium or it trades at a discount. Or you can have a fixed rate bond that's a Euro bond. You can have a government bond that's a premium bond or a discount bond. These types of bonds that we covered here, the 9 different types of bonds, these are not mutually exclusive.